Hello. Well, it's been a choppy week for energy prices this week. The UK's decision to leave the EU is still influencing prices as the pound continues to trade at deep lows compared to the euro. However, supply and demand fundamentals have started to have a larger impact on the direction of prices. Oil and electricity prices closed the week higher compared to last Friday, whilst most gas contracts closed lower. Let's take a look at the week's movements in some greater detail. On Monday, the markets began to absorb the impact of the UK's decision to leave the EU, and Brent closed the session nearly $1.50 per barrel lower compared to last Friday. Prices then rebounded on Tuesday as a threat of strike action by Norwegian oil and gas field workers could see oil output be reduced by around 18%. Prices continued to make ground on Wednesday. The weekly EIA report showed stocks reduced by 4.1 million barrels, and this is likely to be as a consequence of the Canadian fires last month. It's also expected that Iraq's exports have fallen in June, lending support to prices. Prices fell slightly on Thursday as Nigerian output increased following a ceasefire, and front-month Brent closed last night at $49.50 per barrel, up 87 cents compared to last Friday. Prices opened on Monday in line with Friday's close. However, as the supply outlook improved, prices were directed lower, as two LNG vessels are due to arrive in the UK next week. Prompt and near-term prices continue to soften on Tuesday. Longer-dated contracts closed the session flat, and they were torn between a bearish prompt and bullish oil prices. Prompt prices rose on Wednesday, largely driven by the scheduled return of the interconnector following its planned maintenance. It's expected that exports to Belgium would increase due to the strength of the euro compared with the pound. Longer-dated contracts took direction from the prompt as well as higher oil prices. Oil contracts lost value on Thursday, and whilst the interconnector exported around 25 MCMs per day, an increase in wind generation meant that gas-fired demand fell, and this led to the system being balanced for most of the day. Last night, most gas contracts closed the session lower than last Friday. July 16 lost 1.18 pence per therm, whilst winter 17 closed flat at 44.6 pence per therm. As gas-fired generation accounted for 50% of the mix on Monday, power prices fell in line with their gas counterparts. Longer-dated contracts rose on Tuesday, taking direction from bullish oil and a weak pound relative to the euro. Prices continue to rise on Wednesday, in line with gas. And gains on longer-dated contracts were balanced to an extent by news that the EU may have to adjust its carbon emissions target for 2030 following the Brexit decision. Most contracts continue to firm throughout Thursday's session. Last night, near-term contracts closed the session lower than last Friday, whilst longer-dated contracts closed higher. July 16 lost £0.35 per megawatt hour, and winter 16 gained £0.1 per megawatt hour. You can download the full version of this report from the Energy Price Information tab on our website. Thanks for watching, and we'll see you next week.